So it's been an interesting year to start off the stock market, to say the least. Please, before we get started, click subscribe to my channel. Keep up with all of my latest updates because we are very early on in 2023. Earnings season is just getting underway. And please check out a link you see on your screen from a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So I mentioned it's been a very interesting start to the year. A lot of stocks are doing really, really well. The market itself is up, but by 6 or 7%, nothing outlandish. Um, but some of these stocks, especially in the real estate sector, have been on fire. If you look on your screen right now, you'll see a chart of three in particular: OfferPad, Opendoor, the two iBuyers, and Redfin, the brokerage disruptor, are all up by 100% this year. The worst performer on that list, Redfin, is up by about 123% since 2023 started. So, why have these done so well? There's a few potential explanations. Number one is that we're seeing some short squeezes going on. A couple of them, especially Open Door and Redfin, are heavily shorted. I generally consider anything over 10% short interest to be a heavily shorted stock, and they're both around 17%, meaning that 17% of the available shares are sold short right now. There is some company specific news, but not yet. We haven't heard earnings from any of the three companies. We won't for another few weeks. OfferPad recently issued $90 million worth of warrants to raise some capital. Um, so shareholders are kind of assuming that means they're going to avoid any worst case scenario, that they got a little more capital, but not a ton of company specific news. And third, and probably most significantly, the real estate market is showing signs of life for the first time in several months. So Redfin, which does a great job of keeping us all informed about the housing market, reports that home tour requests have risen by about 17% from the bottom. Agent contact requests are up by about 13% from the bottom, which happened in November. Pending sales are up significantly in 2023 for the first few weeks of the year. And we've seen mortgage rates are pulling back nicely from the highs. The 30-year mortgage rate went under 6% for the first time since September last week after the Fed meeting. So we are seeing some signs of improvement in the real estate market. We're seeing buyers slowly trickle back into the market. And it's making us think that, or making investors think that these iBuyers and real estate disruptors will be able to avoid a worst case scenario. So, should you buy? Should you sell? Should you hold on to your shares if you own them? I personally own OfferPad and Redfin out of this group. So, all three of these companies still need a lot to go right for their businesses to be successful long term. Just for an example, right there, Opendoor had almost 17,000 homes on its balance sheet at the end of the third quarter. And the real estate market hasn't exactly been lively for most of the time since then. So it needs to get those off of its balance sheet without incurring too much of a loss. Redfin has been hemorrhaging money. They're taking steps to right the ship, but we need a lot to go right before they could reach profitability. All three of these stocks, for lack of a better description, had been priced for a worst case scenario heading into 2023. They were priced that they were all in very serious jeopardy and likely to not be around in 2024. It's starting to look like they're going to avoid worst case scenarios here. And that's what the market's reacting to. So, like I said, we don't have earnings results from any of the three companies yet, but these moves are based on actual market fundamentals. It doesn't appear to be just a short squeeze or anything like that. So, I am holding on to my shares of both OfferPad and Redfin. I think both still have a reasonable path forward. I wouldn't necessarily buy on the market news, especially with the stocks making the moves that they have. I like all three of these businesses. I think they're well run, but like I said, there's a lot that needs to go right. I also wouldn't take it as a reason to sell. So I'd react kind of in a neutral way to the combination of the price rising and the real estate market improving. I think the gain has been justified, but it isn't necessarily a reason to run for the exits just yet. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.